Good morning, everybody. It's TGIF, guys. Thank God it's Friday again. This is September 3rd, the Friday before Labor Day weekend. And I think a lot of people will probably just take this day off um, and let's make it a 4-day weekend. But with that being said, um, we still have the markets in front of us here today, and just how important are catalysts, how important are the fundamentals of the market as a catalyst, and how important are these job numbers that are coming out here shortly. And estimates are previous numbers was like 900 some thousand, and they're estimating around 750, 780, 750 to 780,000 is what they're estimating. So will the numbers come in better or about the same, or will they be less than that? So for August, and I have I don't have a crystal ball, so I don't know what they're going to report. But at the end of the day, I still believe technicals kind of rule. The fundamentals will kick in, and there'll be a reaction to that those numbers one way or another, either a positive reaction or a negative reaction. And will the numbers be baked in already to the market because the markets are so overextended? So it could be a good report and the markets could react negatively and go down. So there's really no way of really knowing how the markets will react. All we can say is the markets are a collection of people that have an opinion, that have a bias on the market, and they're going to trade, they're going to buy or they're going to sell based on those things there. So with that being said, let's get into this pre-market prep here this morning. All right, guys. Hey, you know that I am not a financial advisor, so got to give you some of the housekeeping stuff here and disclaimers. But I'm not a financial advisor, nor do I give financial advice. And stocks and options contain risk or have risk, and are not suitable for every investor. And the other part of that is you invest in the stock market, you can lose every penny that you're invested. Remember, cash is a position, and but you trade with your own money, so you lose your own money or you win your money. Now, with that being said, if you're trading your own money, you need to also understand the risks that are involved and set your exit points and your profit targets, and don't overstay your welcome and be too greedy, because the markets will take your money. So let's go ahead, and with that business kind of out of the way, let's go ahead and jump into what I'm seeing here in the markets here this morning. Now, if we didn't have the jobs numbers coming out, how do I think the markets will behave today? I believe the markets are extremely bullish, and they're going to close out this Friday with a bang. And now, but we have the fundamentals, or we have the catalyst of the job numbers here this morning. So will that affect the markets in a negative way? So I'm going to explain what I did yesterday and how I'm looking and proceeding here this morning. And that's my plan, my trade plan. This is why pre-market prep is so important, because it allows me to go over my plan for the day, what I did and what I plan on doing. So in other words, if it's this, then you do this type of thing. So if this happens, then this is what you do. If this happens, this is what you do. So you have both scenarios. You have all the scenarios kind of covered. So you have a game plan for the day. So this is why the pre-market prep is so important, at least for me and it's been a complete game changer in my trading. So I do these videos as part of my trade journal, and I do these videos as part of my own education. Hopefully you find some entertainment, so make sure you smash the like button and subscribe, and if you want to be one of the first to get our videos when we release them. So let's go ahead and jump into my chart section here, and we'll start with the Dow. And the weekly chart is extremely bullish, and nothing to say about here. We've been running into some resistance right here at about the 35 540, roughly thereabouts, and so we need to get over that. We're close to it, really close. We're 35 474, so that 35 550 is a real key level. So the net the Dow needs to pop that number basically, and we very well may do that today and get a new high out of the Dow. In the daily chart, it's a little more defined. I have my ATR trailing stop that kind of outlines that resistance right there. And so that gives you a key level. So that's what we need to do. And it looks like we're making a fighting effort. We are in a daily squeeze and we are in a weekly squeeze. So we've got a lot of things in our favor. We've got on the RAF, the ready aim fire, we have a buy signal that last week and that is still holding today. And with our daily squeeze, we are above the 1.2 on the histogram of the RAF. And, we have some volume coming in to the markets here a little bit. So we'll see if we can push higher. Typically September is not a great month for the markets. So far, it's looking pretty good to me as far as my trading is concerned. So let's go ahead and jump into the Russell. The Russells I find is very interesting. I'm not, I really, it's put in a really nice reversal on the long-term chart. Here's that double bottom right here, and we've had basically the bulls came back in, bought this week back up, and then they just this just a engulfing candle from top to bottom on the weekly chart last week. So, and then this week again, they're behaving real strong, and this kind of shows you what it's doing, with the exception of last Friday. And then we had this day here where we had a close, but then from this point on, every close has been higher. So this is a very bullish. We are starting to get a little extended on the daily at the 2 ATR. So, I would probably suspect a little consolidation. And so I really think the Russell and small caps are really digging this market that we're in right now. So, so I'll be looking at some small cap stocks. I've got several on my watch list, and I will be watching some of them for setups once these job numbers come out. And so looking for high probability trades and areas where we can capitalize on some good entries. So we're keeping an eye on the Russell here today to see how it reflects the job numbers and what the Fed might do going into this fall. Let's go ahead and jump, the VIX. Let me talk about the VIX before we get into the S&P. The VIX, I've had this alert set here at 17. We did pop right up there. I did not take an entry on the SPX when we got up here in the volatility. Probably should have, but we then dropped back down into the 16 range. And so I want to pull the VIX up here real quick and just kind of show you on a bigger chart and what I'm seeing that I think is kind of really interesting. When I look at the VIX here on the 1 day, 1 year, we've got this this trend right here. I put in this trend line. So where, you can go back to last year where volatility was running much higher into over 20. and the markets were just, racing higher. But we've been steadily dropping in, our pops on the VIX, and it seems like here, the 25 level, we hit it twice in a row here back in July and again here in August. So but we are, staying above the 15 for the most part. So this, so it doesn't show any signs of like a reversal. We're just getting these little pops, and people are buying the dip. And so we're keeping an eye on this. We are getting a on the daily chart, we are getting a ready on the RIF. So we could be coming down here to an exhaustion level like we did here. And then we turn around and we get a pop up on the histogram. So we may be getting pretty close to that. The EMAs are starting to get a little extended here, so we'll keep an eye on the VIX and see how it reacts here on the day. So with that being said, let's jump into the S&Ps. The S&P has already set a new high, a new intraday high today at 45.45. When I see this, I wish I took a position right here on the low of yesterday. But that's called hindsight trading. Of course, you would have took a position if you would have known today this morning was going to be anything like it is. But this could turn real ugly real fast on us if the markets do not like the job numbers. So I would much rather be safe and hold on to some capital versus giving any of the gains back. But one thing that I've noticed when we have a fundamental, it's usually a reaction or maybe an overreaction. And the technicals, I feel the technicals rule the chart over the fundamentals, because the fundamentals will drive the markets down, drive the markets up, and maybe with bigger moves than normal. And then the next thing you know, they bounce back in line where they should be, because the technicals will do that. The algo flushes here, we had algo flushes coming in and basically triggering people's stop losses, and then the next thing you know, boom, people jump back in, they buy back in and whatnot. So just kind of a steady climb here. I like this chart here, as last week we put in this little flush here, and then we had a higher high, another higher high, and then we had, if you look at these closes, we did get a lower close here, but then the last 2 days higher closes. So we'll see if we can close above yesterday's high, and if that happens, look for this trend to continue into next week. So don't see anything slowing down here. Let's look at the Qs lastly. And the Qs, kind of a similar situation, just kind of consolidating here, not a lot of movement up or down, as far as the Qs. And so again, very, very bullish. And we are bouncing off of the 3 ATR on the weekly chart. So it is overextended. Probably it is the more I think, at risk of seeing a pullback or a little more volatility with the Qs and the tech stocks. So if the tech stocks continue rallying, if Apple and Amazon they continue going, then Facebook's and the Netflix's, if they keep going, then I think we'll see in the markets go. If the job numbers come out, I believe the NASDAQ's going to take the biggest hit on that. I think that's reflected in what the numbers are here this morning in pre-market. So I think the Qs are just lying in wait here for the numbers to come out. So let's take a look at, we traded Amazon, did really, really good. Amazon, we predicted that it would hit this zone here. It did, and it pulled back, and then we had a little more pullback. I like this pullback that I'm seeing in Amazon. It is setting up for another play. I like this because we have a strong buy signal right here on the weekly chart. So that would indicate that this trend is going to probably continue up higher. So we just need to get this pullback. It's coming back into my little trend line here. So we'll see what we get. It's setting up for a small gap up here this morning, a few points higher above the close yesterday is what is setting up now. But again, if we get a poor jobs number or the markets don't like it, I think tech stocks will be on the there'll be a little more blood in the tech stocks today. And now again, that could be it could come out as a good number and the tech stocks could surge on that number, but we're just waiting on the setback. I'd like to see it pull back closer to this level here and possibly retrace back down to about 30, about 3,400 is where I'd like to see it come down to. So have it come down about another 60 points. And I think we would be anywhere between the 21 and the 1 ATR. We would probably look for another entry or possibly a decent credit spread, and take a nice credit on that to ride that up. And so that's what we're looking at there. We do have a position on Tesla. Tesla, we sold the 660 strike, and that is holding very well. We like that, and so we're sitting up pretty good there. We still have a position on Snap. I like Snap. It is consolidating here. It is in a daily squeeze with some increasing momentum to the upside. But right now the bears, Snap has a higher short interest than some other stocks. So, it's really hitting this resistance right here about 76.50, and it's failing there. So, but if you draw a trend line here, we are still putting in higher highs, higher lows on these dips here. So again, looking for this to pop here this morning, possibly. Right now it is setting up. It's looking pretty good. Again, it's the driver of this is going to be the catalyst today. And so but we're getting close to it. We're right on this 21. So for as long as I stay above the 21, then my trade is still valid, and we hold this trend here. So till we get it closed below this 21, next week will be the tall tale whether or not we stay in this trade to continue this up. But we've got time here on this trade, so, and we're not in that bad a situation. So those are the stocks that I've got there. And one stock that I watch all the time and I played a lot is Crocs. That is one, Crocs. If you like those ugly looking rubber shoes, which I don't, my wife does, but I don't. We had a pretty good pullback to the close below the 21. So I'm liking what I'm seeing here. And, it looks like we're getting some support right here, and we may get a little push up. We are on a daily squeeze, and we look at the lower time frames on this here. So we look at the 4 hour, we are getting to the exhaustion level on the 4 hour here. So we've got a ready buy signal, not quite, we haven't got the confirmation on the buy yet. And we're setting up here on the 2 hour chart also. And we just got a buy signal here in pre-market and on our 30-minute chart. So if this all holds true, high probability that we're going to see Crocs going higher into today, as long as we get a good report. But Crocs has a tendency to run when the markets are down. So I find this when the NASDAQ goes down, the Crocs go up. So I'm liking what I'm seeing here on the intraday chart here. So they are setting up for a run higher today, and it's just that we have a sell signal on the weekly chart, and we got a sell signal a few days ago on the daily chart. So we may get a flush higher today, but I'll be watching that, and we'll see how it reacts, because it is way overextended. So we need to get this pull back down here to the 1 ATR, and maybe the 21 right in here on the weekly chart. And then this should be a nice ride back up. So that's what we're looking at here on this Friday. And before a long weekend, you know, so remember, fundamentals are important to the markets, but I believe technicals are the ruler of the market. And not only that, but these job numbers and the fundamentals are just a collection of emotions that people will have an emotional reaction to those, and there'll be people jumping in to the markets if the numbers are good when they see that. So they're going to FOMO in. Don't do the FOMO game, and you're not missing out. These setups will come back. They'll come back. If you miss the run, let it go without you. It's much better to miss it than to get sucked in only to have it rip in your face and take your money, because that's what the markets are designed to do. And last thing I want to do is give my money to somebody else. So guys, have a great trading day, and be thankful that it's Friday and the day before a long weekend. The end of the summer is here, and we'll head into the last quarter here after this month. We'll head into the last quarter of the year, and let's make it a great day and make it a great week, and start next week off strong. After you grab yourself a cold one and enjoy the weekend. So that being said, you guys are awesome. Keep up the great work. We'll talk to you later.